I wonder too if that's kind of also kind of why you're timing this now, because so many people basically have left ETH for dead. Is there part of like that most hated rally aspect to why you think now is the time for ETH?
Yes, absolutely. Ethereum probably could go to 10,000 or something. If the world suddenly realized we're going to tokenize more things, and like these tokenized assets like tokenized dollars trade at 100 times EBITDA, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money.
All right, welcome in everybody to another episode of Coinage. Excited to dig into what has become a huge trend in the crypto and TradFi world. That would be publicly traded treasury companies. And it's not just Bitcoin anymore, of course, as we've been covering for a while. Now you've got ETH treasury companies, and it's not just the co-founder of Ethereum, Joe Lubin, doing it anymore. It's also the founder at Fundstrat, Tom Lee, making big moves by becoming the chairman of Bitmine Immersion Technologies to create an ETH treasury company himself, sending shares more than 1,000% higher. And excited to have on the man, the myth, the legend himself today, making his Coinage debut, Tom Lee. Tom, it's good to see you again, man.
Great to see you. It's been a while,
It's been a
but
long
I know
time.
Sean's been on your show many, many, many times.
Yes, no, Fundstrat, Sean Farrell is. Your guys' research is great, just for macro and also for crypto. These worlds are colliding, and case in point, I think we're going to be chatting here, Tom. But for starters, just kind of wanted to ask you how this all came together. What was the impetus? Why dive into Ethereum and specifically Bitmine?
Uh, well, to me, I think treasury companies make a lot of sense. Uh, the idea of Ethereum as a treasury company, using that as like the treasury asset, also makes a lot of sense. The reason Ethereum, is attractive, in my opinion, is that it is the layer one blockchain where uh, real world assets are becoming tokenized, and we know that at least most of the real world assets have been tokenized. But the big mega trend in the past year, I mean, the real viral app and maybe what I call the Chat GPT moment for crypto has been stablecoins. It's been enormously popular with consumers and with merchants and now banks. It's a good business model for banks, but it's a great deal for consumers because it's a lower way to actually pay for things, and it's
Mm-hmm.
secure because it's a blockchain. And for merchants, they don't have to deal with expense fees on a credit card network or a debit network, much lower fees. And then there's no chargeback risk, which can
Yeah.
run, 5 to 6%, maybe higher for some categories.
Well, I
And
think
oh,
no, I
sorry, go
think
ahead.
no, no. I think that's it's definitely different in terms of an ETH treasury company versus a Bitcoin treasury company, and I think usage is certainly one of those things that makes it different or makes it different. Transactions, which we want to get into, I think just from a higher level too, because I know some of the audience might be more macro, maybe less crypto. Who knows? Some people might be saying, why ETH over Bitcoin, Tom? When it comes to, I think the hard cap of Bitcoin's 21 million. You're talking about usage. Some people might know that it's actually less inflationary if you look at it over the last 2 years plus since the merge. Ethereum less inflationary as we look at that chart. But how do you kind of push back on that to people who are saying, oh, Ethereum doesn't have a cap? Why would a treasury company like this make sense? I mean, it sounds like you were just touching on a little bit with transactions, but I'll let you finish kind of that point.
Mhm. Well, yeah, well, let me go into why ETH as a treasury is attractive. Now, I like the Bitcoin treasury model. MicroStrategy is really the blue chip of that, and MicroStrategy is a granny shot ETF in the granny shot ETF. And because it's big enough now to be included on the major indices like the Nasdaq 100. Um, but what makes MicroStrategy attractive is that he's accumulated enough Bitcoin. He's accumulated almost 600,000. That is so much Bitcoin that he has what I call a sovereign put, meaning if the US government ever wants to create a Bitcoin reserve, well, they can either try to buy a million Bitcoin in the open market or they'll buy MicroStrategy at a huge premium. So there's no way MicroStrategy should ever trade at net asset value. And then because of the volatility of Bitcoin, MicroStrategy in turn can use the capital markets to raise money at much reduced cost. Like if he held Bitcoin, it'd be very expensive for him to borrow money to buy more Bitcoin. So if you own MicroStrategy, he's working to give you more Bitcoin per share every day, and actually at a efficient cost. So over time, you're owning more Bitcoin, so you benefit from the Bitcoin going up. Plus, he's getting you more Bitcoin per share. Now, the ETH Treasury models, and there aren't that many. There's a couple out there, including the one that was announced yesterday. There's a bit of an advantage of a Ethereum Treasury company if you directly compared it to a Bitcoin Treasury.
Mm-hmm.
One is that there is a yield you can earn on Ethereum by staking. So you actually can grow your Ethereum per share from that income activity. The second is that Ethereum's delivered volatility, so it's a measure of how much it moves, is actually twice that of Bitcoin. So in theory, if someone had looked at it as like a capital markets access, like following MicroStrategy's model
Mm-hmm.
of trying to earn more crypto per share, well, Ethereum's volatility actually makes it cheaper to fund purchases. So because the higher the volatility you have, the more you can sell volatility and then lower your cost of borrowing. And the third is, of course, that because it's a staking token, a treasury company actually can also act as an operating business
Mm-hmm.
on the network itself. And that's important because that ties back to something I'm originally thinking about, which is that as more things in the financial world and real world become tokenized, then financial institutions like Goldman and JP Morgan and Amazon Walmart, as they do stablecoins, are also going to want to stake Ethereum itself. So we're essentially doing the underlying architecture of what other businesses will actually do. So we're essentially getting in front of what other businesses will do.
Yeah, and I think that that's kind of the interesting thing when it comes to where price goes from here, not necessarily for Bitmine, but for Ethereum, because if you've looked at the chart, we've been kind of stuck here for a while, trading around that $2,400 level. It hasn't really been on the move too much, and Bitwise just came out saying that they expect kind of the back half of the year, maybe Ethereum doesn't get back to new all-time highs. I wonder what you know that they don't, Tom. Maybe perhaps it is kind of what you just described, but it could also be now, as your chairman over at Bitmine, that you know much more about kind of scooping up ETH on the open market, or how you plan to do so. So I mean, I guess for you, if this is kind of your first move, your opening salvo, so to speak, as other people watch this, might trigger more people to do the same. I mean, how do you see that playing out over the year for where ETH goes?
Well, in a way, I do think there is, Ethereum has a vibrant and active community that's working every day to kind of create and improve it. And there are, it's a smart contract platform. And so to me, Ethereum might have actually languished and lacked innovation for some period of time. And that's really what, um, that was behind the fact that Ethereum sort of hadn't moved much. But I think that the fact that there's now tokenization taking place of real financial assets, and you saw with Robinhood the idea that they're going to be tokenizing a lot of things, including private companies. I think that there is going to be a real look back at the layer one networks that offer a lot of utility with smart contract, but they're secure because they're actually US based, or a lot of the validation takes place in the US. And so that's why I think Ethereum really stands to benefit. I know that there are other chains that have a lot of stablecoins, such as Tron, but one of the challenges, of course, is that that a lot of the activity on that takes outside the purview of the U.S.
Yeah, and I think you're right. I mean, pointing out Robinhood, of course, Coinbase building on top of Ethereum with Base, though some critics might say it's a bit centralized for now. And there are even people who are saying, hey, is there kind of, some of that being siphoned off into that ecosystem? How much really comes down to Ethereum, the layer one? I think that those are open questions. Obviously, the whole reason for this thesis was that eventually there'd be so much demand for block space and kind of transactions that you would need those layer twos to kind of make gas cheaper. I think it's a big
Mhm.
question in terms of how quickly some of those people start using it. But now with treasury companies, it's almost as if, like you said, it's kind of sapping up any of that extra kind of supply on the margin. And another one of those ETH treasury companies, we just had the co-founder of Ethereum, Joe Lubin, stop by the Coinage studio out here in New York. Of course, he is also steering things over there at SharpLink. And I do wonder, I mean, in terms of how you do this, Tom, that's the other big question. Because if you look at that chart, SharpLink stock basically round tripped when they announced that they were going to be doing this. Bitmine, so far, still holding up pretty good. And I think, what Saylor did so well was kind of this monotony and his methodology of announcing these buys, the way that the market came to expect them and look at them and know what's normal. I mean, how do you kind of want to implement this in pairing crypto people with TradFi people and kind of speaking both their languages? What's kind of the lesson when you look at a SharpLink and maybe how to do this right?
Well, I know Joe, and I know the consensus folks, and I really respect them. And you know, and they're really critical to the future success of Ethereum. Um, and but what I haven't I don't think I can really give you any full color about sort of the questions you're asking. It's just you know um, I think they would probably not be things I should be really guessing, because those would just be guesses.
Well, I think in terms of communication, though, is my main question. Like Joe had tweeted after he saw the stock come back down and mentioned that maybe people are misunderstanding the way that these things normally work, the way that they're described through
Yeah, he's
SEC filings,
correct that
things
way.
like that.
Yeah, I mean, he was correct. I think what you're referring to is that there was a date where, like, there was a registration statement effective, and then someone had written, like, I think the crypto world is not really used to SEC filing, so then they see this registration statement, and then someone like Rostar, like, oh, everyone's dumping their shares, and I think in crypto that's common because they would call that a rug pull. They're like, oh, there's a rug pull about to happen,
Hmm.
and but I think that that's you're right. Over time, people learn different behaviors. I mean, I would say the most successful crypto traders actually are quite gifted, and they actually do quite well trading equities. But as you know, the thing is, in the equity world, there's been a lot more value created by not trading. I don't know if you saw the tweet by Chamath Palihapitiya, but he said, I think yesterday, that, let me try to find it. But he was basically making a reference that if he had never sold any of his VC bets, he'd actually have like $30 billion more money.
Yeah. No, I mean, I think it
So
is one of those it's one of those things that people in the Bitcoin community have always preached as well in terms of just holding
yeah,
on
so
here.
that's right, and that's what we preach at Fundstrat, which is you really should learn to be patient. The biggest, most recent lesson is what happened from February to April. Like this year, we had a black swan with tariffs.
Yeah.
I mean, it caught everybody off sides and off guard, and we had basically a liquidation, mass liquidation of the stock market, waterfall decline, and we gave very unpopular advice to our Fundstrat clients, which is don't do anything because it's going to be a V-shaped recovery. We said every waterfall decline is a symmetric bounce.
Yeah.
And we had so many people saying, yeah, it might have worked in 2022, it might have worked in 2020, but it's not going to work this time because the Fed's not behind your back. And we said it won't matter. And so a
Yeah.
lot of people liquidated, but guess what? We had a V-shaped bounce without the
No,
Fed.
you
I
were
mean,
right
with
then, and it reminded me of when you were right back in the pandemic too, because I remember you kind of predicting very much the same thing back in COVID. Was like,
yeah,
hey, we're gonna have a V-shaped bounce. Everyone called you crazy back then too, and look at you were right back then.
yeah.
I think I wonder too if that's kind of also kind of why you're timing this now, because so many people basically have left ETH for dead. Is there a part of like that most hated rally aspect to why you think now is the time for ETH?
Yes, absolutely. I'm just giving you something simple to think about. And again, like, I'm not doing this on a supercomputer. I'm giving you like round numbers, okay? But Circle, which has been a very successful IPO, and it's been the most successful IPO like in the last few years, and it's crypto. I mean, crypto is been one of the best equities and now the best IPOs. But Circle trades at around 100 times EBITDA. So, a 1%, I don't know, yield, you might say, or a 1%, EBITDA yield. I mean, it's a pretty sizable multiple. But stable coins really operate off a layer one. So, a lot of Circle operates off Ethereum. And if you
Hmm.
look at the tech stack, typically, um, the more you get into that layer one, like sort of level, the higher the multiple should be for the business because it actually benefits from the multiple applications sitting on top of it.
Yeah. No, that's a good point. I
So
mean,
yeah.
I
So
mean, I think
then
like,
if you
sorry, I'll
yeah,
let you
so on
finish your
that same
point.
metric, Ethereum should have a staking yield. The yield should, if the enterprise, I mean, Ethereum should have a much higher multiple. And
Well,
so I asked that to Sean Farrell. He said, if you do the rough math, you get Ethereum would be very undervalued if you were looking at Circle relative to layer one. So that's why Ethereum probably could go to 10,000 or something. If the world suddenly realized we're going to tokenize more things, and like these tokenized assets like tokenized dollars trade at 100 times EBITDA, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money.
yeah, 10,000 I think might catch people's eyes on that. But I think a lot of this is reflexive in terms of some of it again begets, and this is something that maybe macro and TradFi it doesn't really understand in terms of when you're dealing with this on chain, it kind of triggers more activity and more, like you said, tokenization and everything as people kind of want to move ahead of what's to come. I know we only got a couple minutes because you have to jump, but one of the other questions, just to leave it on, I'd be remiss if I didn't bring up maybe some of the fears that some people have with some of these treasury companies, kind of the idea, again, speaking to the reflexivity of it all. Because there's the Saylors of the world, and then I think there's a bunch of other people who are trying to do the same with Bitcoin. Now you're launching this one with ETH. I mean, what do you kind of say to people who get nervous about some of the downside reflexivity if prices are to flip? I know, obviously, again, you're smart, you can handle this, but there are other people who might not understand what's really at play here. How do you kind of assuage those fears?
Well, I think there's two things to keep in mind. One, there's plenty of precedent for treasury companies in the historical stock market world, whether it's master limited partnerships, but it's also like the energy industry, like a commodity industry. ExxonMobil was for 25 years, the largest or the top five largest company in the S&P 500 for a single generation. Like you could have been born, like graduate high school at 20, and by the time you're 50, the biggest stock in the market was still Exxon, okay? It was never valued off earnings. It was always valued as a multiple of its reserve of oil, and it never traded at the value of its oil. It always traded at a multiple higher. And so that means in the market dictionary, if if equity investors believe a treasury company has the right management team in place and the right capabilities to raise and grow the value of the crypto held per share to go up, it should always trade at a premium to its net asset value. That's what MicroStrategy has proven.
Mm-hmm.
But if someone's just saying, I'm going to put Bitcoin on my balance sheet, I should get my stock price go up, that's never going to work because that doesn't create that ability and the attractiveness, which I described earlier about why treasury companies are attractive. Like can they lower their cost of financing to grow their coin holdings per share? And if they can't, it should trade at NAV. So I think the bifurcation you're highlighting is the market's conclusion that not everyone's going to be able to achieve that.
Yeah, and I think again, it's not just kind of what the strategy is; it's also who's executing it and who's handling it. And perhaps no surprise, Tom, that the market's giving the respect to the team that you've assembled and who you've gotten to back you guys at Bitmine as well. I'd also say that what we're doing here at Coinage is a community-owned co-op DAO on chain with our treasury and ETH too. I want to give a shout out to what we're doing here just because the idea of it being perhaps 3 years ahead of its time. I'm excited to see other treasury plays come to market, including yours. But I know you got to jump. Thank you so much for coming on. And again, love all the research. I want to shout that out to you as well. And Sean Farrell and what he does on the digital asset side. Phenomenal. Also a Coinage NFT holder. I don't know, Tom. I don't know if you can join now, but our community wanted to ask if you would as well join Coinage. So I'll throw that invite to you too once we wrap here.
Send me
But
the
Tom,
invite.
I will, man.
Okay.
I will. Tied at the hip in the ETH world now. Tom, thanks so much for coming on, man. Appreciate it.
Thanks. See you later.
All right. That there is not just friend of the show and founder over at Fundstrat, but also now chairman at Bitmine Immersion Technologies, Tom Lee, as we learn a little bit more about where ETH could potentially go here. Again, not just Bitmine, not just SharpLink Gaming. As he said, a lot more treasury companies coming to market with the idea of ETH potentially reclaiming its sound money, dare we say digital oil, moniker as we move forward. For Tom, for myself, for everybody here at Coinage, can't thank you enough for tuning in. As always, you can co-own our community-owned outlet at coinage.media and catch all the big headlines around the world of Web3. Thanks again. We'll see you again soon.